Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.isc.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
For example, and then I'm going to move forward. I'm just going to show you here. For example, an entry here to play into a target up in here would be a break of that key pivot right in there. So as we pushed and closed above here, that shows us that there is some strength and some commitment to this upper range, and then we could look at a high probability of trading up into this 124, 125 level. Now at that point, again, we need to recognize that it's not a razor's edge. This is a key zone, and as we play there, we have to be prepared whether we're at 122.90 or 123.50 or 124. Recognize that there is the potential for a rejection, and we want to make sure that we're locking in our profits. Whether it's 25%, whether it's 35%, whether it's 100%. On your option contract, the fact is it's playing into a key technical level, and we need to make sure that we're managing it accordingly. Okay,
hey, Jay, do you mind just talking about double bottom, double top, and how that term might, be confusing when you're using the ICFX options because it's all dollar relative. So, you may some of the listeners may be looking at Canadian versus U.S. and thinking it's the reverse. Do you mind going into that and how?
Yeah, no, absolutely. We're gonna talk about those specific patterns as we move forward. But again, the one thing to recognize, of course, is that the U.S. dollar is the base currency here. So we are trading our views. Real easy way to look at it, on the strength and weakness of the U.S. dollar. So, for example, here, as we look at the CDD, although it kind of leads one to believe that we're basing it on the Canadian dollar here, we're looking at this, say, support level, and what is being suggested here is that the U.S. dollar is finding support. As of late, it has lost strength, and pardon me for this football-like commentary here where I'm drawing all these lines and circles, but the fact is we're looking at a decrease or a devaluing of the U.S. dollar against the Canadian, playing into a support, and now we're seeing a strengthening of the U.S. dollar. So if I was looking to trade that particular view, I would be buying calls on the CDD, anticipating that the U.S. dollar was going to now start gaining strength. Does that make sense, Steve? Does that answer the question?
Perfectly clear. Thanks, Jay.
Okay, good stuff. So let's move forward, guys, to the next chart here, or to the next slide. Let me just get my arrow up. All right. So that kind of brings us into the whole concept of support and resistance, which really forms the foundation of our pattern identification, our trade opportunity our trade opportunity or our trade entry identification. Because realistically, no matter what pattern you're looking at, it's simply based on the concept of a particular security finding support at a certain level or meeting with resistance at a certain level, and then how it behaves within these levels, or as it bounces or rejects off those levels. So we come back to the whole concept of peaks and troughs, and those peaks and troughs really form our support and resistance levels, and this is where we find strength and weakness. So I'll be referencing a chart here in a minute, but of course lows are considered support. So as prices, as our pair values move down, as we were looking at with the CDD, into these key levels and start to consolidate, we can be comfortable with the idea that, okay, the market is not prepared to move this lower. So if it's not prepared to move the price or pair value lower, then there's a high probability we may get a little bit of a bounce, at the very least, to a higher level. And this is how we can start establishing our thesis by recognizing these characteristics. Now, Again, conversely, our highs are considered resistance. So you simply look at that. We kind of look at it as floors and ceilings, just to make it a lot easier to understand. Consider your support level like a floor, and if that floor breaks, then you're not stopping high probability till you hit that next level or that next floor or support level. Your highs or your resistance are considered your ceiling. And again, you're going to bump your head on that ceiling. Once you break through, you're going to keep going until you hit that next ceiling, and then you're going to test that ceiling again to see whether or not you're able to continue, or whether or not you're going to have to go back down and start from right back from where you began. So it's really about just stepping back and watching these sort of little battles take place within these levels, establishing who's won, either the bulls or the bears, and then trading within that direction based on your the clues that have been established. Now, to kind of illustrate that, if we see a market rallying, you're going to ultimately see a pullback, because nothing moves in a straight line, and that pullback represents what would be known as a resistance level or a pivot point. And it's natural, as prices move into these higher levels, people want to start profiting, because if you bought in, way down here, the only way you make money in these markets, in any market, is if you take your profits. Other than that, it's just something that's on paper. It looks good when you open up your trading account, but until you actually execute that trade, in the case of our pair value, our ISCFX options, if I buy a call down here, that's all well and good. It's increasing in value, but as we play into a resistance level, I have to recognize that there is the potential for that pair value, if it's the CDD, to reject and pull back, and so I really need to be prepared to start locking in some profits. Of course, as it pulls back, if this trend is going to continue, I know that we're going to establish and meet with some support. And if we see some consolidation at that support, I may have taken some profits up in here, but I can now step back, and without having any capital in the market, so I'm thinking clearly, I can see how our pair value trades within this level. Is it finding support? And if it is, then I can go back in and I can look for taking another decisive position. So it's all about, again, we always say, when you hit this resistance level, the profit that you're looking at, if you take it at that point, is 100% yours. In other words, you know that if you click that sell button right away, it's in your pocket. If you wait to see how that plays out, recognize that the possibility for the market to pull back is there, and you can always get back in. So getting in and out of these markets, or at least locking in your profits, is an important aspect of making sure that you're protecting your capital at all times. And I don't have to replay what happened over the last year with respect to the overall markets in general. If you don't lock in those profits, they can be taken away relatively quickly. So as we move forward into these higher highs, again, the whole story is going to play out once more. We're going to see a rejection, and then we're going to see a play back down, and then your previous resistance now becomes support. And again, we can look for consolidation there, and we can, of course, reestablish a position, recognizing that if we don't see a break higher, then that whole concept of an uptrend making higher highs is now coming under some scrutiny here, and we have to be prepared for a rejection and a possible reversal pattern taking place for maybe a test back down into these lower lows. So possible implications, of course, are we get an early warning of a trend reversal. And guys, these charts, if you go back, are littered with these types of scenarios playing out, where we see these tests of highs and rejections at these key levels, that usher in new sort of bearish trends, whether they're short-term or even longer term in duration. But these clues are there for you to go back and just see how important they are to recognize. Of course, if a resistance is violated, we're looking at a continuation of an uptrend. If support's violated, we're looking at the continuation of a downtrend. And again, we use these clues for trade entry identification. And we also use them for price targets and trade exits.
Thank you for listening to our podcast.